So we're going to do cash flow. This is our third one. Just introduce myself again to those who don't know. I'm Jessie Williams. We can introduce ourselves around the table. I'll introduce Ian. Ian starts with me today. It's his first day. I've known Ian for a lot of years. We look really, really younger than we actually are. So we know each other since college. And that's pretty much it. Like, you know, you can tell about yourself. You do tax, whatever it is that you do.
Hello everyone, my name is Ian Ruddock. You might hear an accent as well. I'm also from Jamaica, the Caribbean.
Not Queens.
Started out at KPMG, then moved on to Presswood House, did some work in finance at JP Morgan. But overall, I'm here in terms of getting better understanding of what it means to be an entrepreneur, what it means to be handling, you know, client accounts on a more sublime level, so to speak, and just trying to, you know, get my bearing right now in terms of what's next. And, you know, working with Jessie is a real eye-opener so far. You know, a lot of things to be learned, a lot of things that I'm also bringing to the table, but at the end of the day, you know, it's all a learning process.
All right, we go with Chris next.
Sure. Christopher Chen, just here to learn.
That's it.
That's it. Simple.
So Chris does consulting. He's being shy. He does consulting for cyber security.
Oh
Yeah.
My gosh, I see I listen.
Mm-hmm.
Yeah, and he just saw myself and decided to come on. You're next.
So that's Nancy Schick, and that's also how I got here. I came last month, and I've been looking for a new accountant. So
She came to audition me.
yeah, pretty much. I did. I told her when I got here. I was like, just so you know, this is kind of an interview. So I love Jessie. Already sold on her, as you probably are too.
Well, this is going to be one of the most intimate ones we ever had, due to the light and how it's just two of us really. So the first one I did was just on accounting, record keeping, and all that stuff for newly hired, startups. And then we did taxes last time, touched on some of the new things, what to expect, and I touched a little bit on tax planning. I'm probably going to end with planning on a whole. But I wanted to get your thoughts, like when you think of cash flow, like what do you think of? And I like to ask that question for a reason, because I have a client that for some reason can't get out of his head why his profits is less than his cash. So when you think of cash flow, what comes to mind? Like, what do you think of?
Oh my God, I don't know. No. Right, we're not at the right time. That's what I think. It's like, because I think about at this point, it's not just about the not enough. It really is about the timing.
Yeah.
And that's what I'm trying to get better at.
Mm-hmm.
Is having enough diversity in the types of things that I do, that I have a consistent cash flow, so that I'm not going, please let that check come in because I can make my rent. Right?
Yeah. Yeah. I mean, I'm going to give you what the professionals say, and then because, you know, what's out there is really for bigger business, medium size, and when you think of small businesses, it's such a broad base, you know what I mean? There's a small, there's itsy bitsy, you know, there's one, there's two, you know, and I'll give you, like, you know, my tips that I do for someone of my size, you know, which is probably you, and, you know, for consulting. So these are my thoughts. Like, I really think it's the lifeblood of every small business per se, and I'm only telling this to small businesses. You know, a healthy cash flow, I think, is more important than actually servicing your clients. And, you know, I said that to someone, and I remember seeing that, and it was like, that doesn't make sense, Jessie. That's so, like, you know. So I said, you know, if you think about it, if I mess up with a client, I make a mistake, I'm new, you know, I probably didn't get back to them right away, you know, they're unhappy, and that's then be the one thing that's important to them, you know, I might lose that client. Okay, I live and learn. Next client I get, I'll probably make that a key effort, and I make it back. But once I run out of cash to pay Ian, to pay Christina, and to pay rent, I might be essentially out of business. I mean, I've always worked from home, yes. I could probably do not do this, but stuff is going to start suffering, and then I could really go out of business. And that's one of the ways people get bankrupt. You know, they can't pay their suppliers, and your suppliers are the ones who's bringing in the inventory, so you can actually sell and even have a business essentially. So that's why I say, you know, keeping an eye on your cash is very important. So this is definitions out there. It's the movement of money in and out of your business, and they're called inflows and outflows. And you know, sometimes you know you send an invoice that nothing happens to cash, so that's not an inflow of cash. You know, so my little note there says inflow only occurs when cash is collected, actually collected. You know, a check depends on you know who the client is. And when a receivable is actually collected, unless the cash actually moves, it doesn't count. So this is what I had to actually teach this client of mine. You know, your profit is usually for a particular year time frame. Like you know, you send an invoice. The minute you send an invoice, that's a profit right there. Well, technically, that's income that's coming in. So you would debit. I'm going to use debit, but we increase our revenues and we increase our accounts, you know, receivable, because we're expecting that cash at some point. But we just send this person's invoice. So now our profit, our P&L goes up, but our cash stays the same. The thing is with cash, is more dynamic, is more focusing on the daily operations. And like I said before, is the movement of actual money coming in and out of the business. And you know, if you're profitable, like you've seen with a lot of companies that go bankrupt, you can still go bankrupt and still have good profits. You know, the stockholders are happy, everybody's happy, but the cash isn't there. I mean, it will take a lot for you to go bankrupt. It takes a lot of negligence and stuff like that to happen, but it could actually happen due to poor management of cash and a little bit of fraud too. So I gave an example, but this would have made sense if it was a lot of people here. But you know, I just give an example of a retail business. You know, they bought $1,000 worth of inventory, and they mark it up double that to sell it for $2,000. So they made a profit of $1,000, but they still didn't collect anything yet. So right now the P&L looks good, but the balance sheet is still not. I mean, the balance sheet pretty much it books receivable, but you have no cash in the bank. If from the time you send out that invoice to the time you actually collect that cash, you have stuff to pay on, that gap is what we focus on. That's is what we're trying to close that gap to make sure that the things that we have to take care of between that gap is taken care of, like paying vendors, like you know, whatever the case is. So that's basically what I'm saying, it is closing the gap, but it could, go ahead.
I was going to say that's when you take into consideration some of your account receivable turnover rate. And
Right.
then you match that to how the cash is coming in, and then that's when you determine if you need to adjust your
Right.
payment schedules or adjust your vendor schedules to match that up, to be more in line with your cash inflows. So that's...
Right, so there's actually services out there for cash flow management. I don't provide them, I just give it away for free. It's just tips. But the thing is that when people want to manage their cash flow, that is what they look at, that gap. And there's some components that they look at, and wow, they're not that fancy with this. Okay, you know, to take in control of it, like I'm saying, is to analyze the components. And basically what it does, I'll tell you what components are on the next slide, but we're looking at these factors that affect your cash flow to basically close that gap is between when you send an invoice as to when you actually get the cash. So these are the components, like we said, accounts receivable, and it's going to highlight what's the most important thing is here. The longer it takes for customers to pay you, the more negative that affects on your cash flow. Now, we are in a service industry, so we probably don't do terms. I don't know if you do terms, I don't, because this is my understanding. You meet with a client, you have an understanding, and they have an understanding what the price is. You even probably discuss with them when delivery date will be. And you expect when you deliver to get paid. There shouldn't be a gap. Most of the times too, I would try to collect before or even half. or we would do progress billing if we're doing an audit. So we collect half up front, we do another half of the half, in the interim. And then when we give you those reports, I'm ready to collect the last piece. So I'm never really gonna give you terms. If you ever get an invoice from me, it's paid on receipt. So I feel like in a service industry, we shouldn't have this unless you're just poor in sending out invoices.
Well, it's also if you have an ongoing project. Like for me, some of my projects are multi-year projects.
Yeah.
And so I'm billing them like when something substantive occurs. And I had one who got about 6 months behind in payments, and it was my largest client, which I no longer work with because of what it did to my cash flow.
Yeah. So I always like to, I'm telling you right now, even my monthly clients, it's an ongoing thing. I bill them at the end of the month for the next month. And usually what I would say is, hey, we're going to do this monthly. You want to keep something on file, just automatic. Because I tell them in a nice email, I'm quite sure you have other things to do than to remember to pay me every month. And I don't want to be chasing you down. It doesn't feel good. Would you like to just have something on file? And most of them say yes, to those who want to pay. Those don't want, I've never really had an issue with people who don't want to pay because services will just stop. And I bill you in advance, so if I don't get paid, chances are I'm going to delay the services. You know what I mean? So there's things that you can do to shorten that gap.
Unless you're dealing with a large corporate client that is in the middle of the litigation. And I know they've got you, because you can't just go, oh, you're not paying me, so I quit in the middle of your litigation. And they play that. That's why I'm not working with them.
Yeah. But could you do progress billing?
I was. I was doing progress billing, and they still were way far. I had like 30 open cases with them, and they just weren't paying on any of them.
Wow.
Yeah. And that's a substantial amount. I had a business coach who looked at it and said, so let's just look at your numbers, and just having somebody look at your numbers in a different way. He said they owe you 50% of what you normally make from them for the whole year, and it's November 1st. And I went, oh, that's why I can't buy Christmas presents for my family or go home for Christmas or anything. Right? I mean, you kind of know it, but just being able to see it like that. And have
really
it framed of like 50% of their billables for
Yeah.
the whole year. They
Yeah.
still owe me, and it's a month from, it's technically, a month from the end of the year.
Yeah.
So that's what I've learned, and that's why I was like, any tips you can give me to avoid that again?
You know
I'm all
what?
for it.
There's some things that are unavoidable. There's going to be some clients that just don't want to pay you. They know they're not going to, and they probably can't. I honestly feel that people.
Oh, they could have. They're huge international.
Okay. But that's the next thing too. Like sometimes again they might be huge, but their cash just suck.
That's true.
They may have a client that didn't want to pay them.
That's
so
true.
It's a triple effect. And I think something like that are one-offs. I would honestly be like, it's hard to prevent stuff like that. And the bigger you are, the bigger clients you have, the more you're gonna run into that. Like even when I worked for public accounting, our partners used to say, hey, check with billing and make sure we got paid for the last pay period. We're not going to continue working for these people. And it's like, I shouldn't have to be bothered with that. I'm the preparer. It's a total different, but you have to do something. So, a lot of people just don't pay, or the department is not talking to each other. That happens too. So the bigger you get, that's why I like my smaller clients.
I do too.
You're not trying not to pay. So moving along with, you want to look at your credit terms as well, like we were saying, giving people time. Like, a simple way to improve cash flows to get customers to pay their bills more quickly. And I just have that discussion. Like, look, we're not going to do net terms. I don't even give you 2 days. But technically, I send you a bill on Friday. You want to pay me Monday, it's fine. But don't a week after I start sending a reminder. In fact, I have it in the system that if I send you a check or a thing in 2 days, I send you a reminder. But I honestly don't play because my thing is just that I'm small, and two, when you need services, you get me right away. I'm never delayed with service. But so don't delay with the check, and you got to be very frank with them, and most of them kind of respect it.
Yeah.
Credit,
Anyone from it.
yeah, credit policy, we can skip that because we're not really, you know,
Do you think credit terms are more effective than doing something like once you invoice me, then I expect to get paid?
well, it depends on the industry. So I have this, you know, if you're in contract, building something, you know, more touchy. For instance, we have a pest control client. He does terms. He does his, you know, he wants his payment in 30 days. I think that's ridiculous because I don't understand why it's a 30-day turnaround just in 2018. I don't get it.
Larger companies.
Yeah.
I guess, yeah.
Payroll,
So he services people like the airport. So the airport is on like Port Authority. He has Port Authority and he has LaGuardia Airport. So LaGuardia doesn't want any given time for you to walk in there and see a bug or anyone to be bitten. So they have routine maintenance. He goes in routinely and spray, and it's a big job because it's a huge airport, right? Well, for the most part, and you know he gets paid on a lag. Like every once in a while, we gotta check. Like at the end of the year, we're constantly checking what open invoice do we have, and I'm like, why do you still have 3 months? 3 months, like you have to get on the phone, like. If it's 1 month, fine. 2 months, okay. But 3 months, maybe somebody didn't get an invoice, and you need to check that. You know, so that's something like that. So like I said, like you're saying, the larger the company, the bigger the thing is. But most of the times and you see the flip side of it too on the next side. Like if I have account payables to pay, and if he's giving me 30 days, I'm gonna take the 30 days. You know what I mean? There's a discount there if I pay within 2 days or 10 days or whatever. I mean, what's 2%? It's not gonna make or break me, but that time that I get to wait to pay you is more valuable to me. So that's the flip side of it when you have to pay. But again, if the discount there means something to you, I say take it, you know. But we don't have that in our industry. I don't know. Have you ever gotten an invoice where they give you, other than your utility bills or whatever, like, you know what I mean? But I mean, in work, in business, you know, if I ask, you know, Chris to do something for me, he expects to be paid like ASAP. You know?
It's typical for me, 369 or MR.
You do that?
MR, I mean operation stuff. So it's operations MR, monthly recurring revenue. So
so you do a monthly.
I do monthly recurring revenue.
These fancy terms.
Or
I know, I was like, what is it? What? Thank you for explaining.
Yeah, gotcha. So when you do your monthly, is due what, on the first of the month, end of the month?
yeah, whatever the terms are, maybe it's 15th first month.
Yeah, so I guess it's easy enough, you know, to set it up for what your client needs.
As long as they know it's a
Yeah.
recurring thing, it's fine.
Yeah,
That's usually multi-year.
right. So if they say, if you send an invoice out, do you send a monthly invoice for your monthly recurring clients, or do you?
No, it's a
it just comes out.
T's and C's already take care of that.
Yeah, gotcha.
So payment terms already are set in the contract.
So then you
T's and
already
C's.
look out. You already know when you're going to get paid.
Right. I mean,
See, knowing is good too. Even if
but
it takes.
larger companies all do that, right? Especially if it's operations, it's recurring.
Right. That makes sense. Yeah, my recurring is, you know, it's just keeping the books, you know, so I do have some retainers and they know it's monthly. I think it goes out like the last Monday of the month. And I really don't, my monthly, I don't bug them that much because they tend to pay and most of them on, you know, stuff, but I do have some people that when you do the tax return and it's like over $1,000, you know, they take a breath. You know, and it's that I know right away, oh yeah, I'll be chasing you, because when you do a business return, I can't take my fee out from your, you know, there's no refund. So I can't get my fees unless it's an individual client. And even then, if it's a big individual client, you tend not to take your refund out of a huge client like that. If you have a client that has a lot of stuff individually and their tax return, let's say, is $800 to $1,000, it is not professional to take the fee out. Like, they'll cut you a check and you just have to just wait. That's just how it is. So, yeah, you know, like I was saying, there's some intentional cash flow gaps that we just can't, you know, move away from, you know. And, you know, sometimes that deals a lot with inventory because sometimes people want to take advantage, like, there might be a discount and they might buy a whole bunch of stuff right now, or they might actually wait, they accelerate some cash flows and take advantage of trade discounts or speed up to expand their credit line and stuff like that. So there's some stuff you can't really avoid. And like seasonal too is another one of it. These are unavoidable. For me, typically in my line of work, this time of year seems to be the driest of the whole time. Although I'm busy all year round, but you could expect during tax time it's like through the roof. So that's when planning and budget comes in. Our cash flow gaps, sometimes there's external financing, and we may have to pay stuff that's not really tied to our every day-to-day business. So, there's some stuff that we just can't avoid. But all that is just gibberish gabberish to say what we do. Okay, fine, we know we can't avoid certain things. You know what to look into. Planning is your friend. Whether it is financial planning, budget planning, cash planning, tax planning. I say planning is one of the things that I'm a big advocate for. So, like I was saying, the first signs of financial ruin appears when your cash flows. Look at your cash flow statements. A lot of people, when they get their financials together, they only think of one statement, your profit and loss. Most of the times, people don't care about their balance sheet, because really, if we're just a small business, what's on there? Cash, and if we owe somebody, our receivables. But it's important to look at that too, because it tells you a lot, your cash flow. If you look at your cash, you look at your receivables, and you gotta look and see your payables now, what you owe. Is that cash could cover what I owe? And there's a good relationship with that too. If you add inventory in the mix, like how is your turnover? How often are you collecting on your receivables? Your balance sheet tells a lot. Your cash flow now tells you, okay, yeah, I have cash in the bank, but are they from financing? Are they from actual operations? So once you could read, a lot of people can't understand or read your cash flow statements, but it's one of the most important statement I find. If you know how to read it, it tells you where you get most of your cash from. You have that, 25K sitting in the bank. Where did that really come from? Did it come mostly from operation? Did it come mostly from financing of loans or whatever it is that you may have borrowed? And that could be a nice opener. Some of the services out there are people who actually manage servicing, but the two that I highlighted there, having a budget. Now, I have my own QuickBooks for my business, but then I have a spreadsheet on the side. When I wake up sometimes in the morning, I look to see what cash is there, what checks did I write. I immediately subtract it there, because let's say I write, I'm old school, I wrote a check for this. They're probably not going to cash that check till probably, Friday, right? So in the meantime, I'm thinking, if you pay attention to your cash, it's not really actually true. So, we kind of have to do that kind of like old school ledger where we write it down. I do that in Excel because I need to know what's coming. I mean, I do that more so in the beginning of the week, and I look at it at the end of the week. What do I have coming up? I have an extra $5,000. All right, let's do something. Let's do some type of promotion. Let's buy a cute something for the office. That's when you kind of know. And then as you start going through the motions with your business, you tend to know what cash kind of lays around. So you know what you can put into promotion, where you could put into a happy hour, where you could buy a gift for one of your clients, or something simple. I'm kind of forecasting your cash flow for the next year. Like really, 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 really plan. This is something that I'm not saying necessarily I would do for free, but with the bookkeeping, you do your bank reconciliation, make sure everything is kosher. Even your credit card, you need to reconcile as well. Looking at your receivables, is anybody really owing you for the past 30 days? For the past 90 days, sorry. Give them a call and say, hey, what's going on? Some of them honestly forget. I sometimes do forget. Like when I used to get paid for someone else, I had all my bills listed down, and I grouped all of them based into the time I would get paid, let's say the 15th and the 30th. So okay, so this group I'll pay on the 15th, and this group I'll pay on the 30th. And it was a no-brainer, I never forget. But I always keep forgetting my business bills, because I don't do that, because I don't have a set time to get paid. So, even when, let's say Adobe, I pay for Adobe, or I pay for something, or GoDaddy, or whatever the case is, I'm like, oh shoot, totally forget about that. And then now I write them on the side, I put a date to them, so I expect when it comes out. So at any given time when I go into my bank account, I know exactly what's what. And that's something that you should get accustomed to when it comes to managing your stuff. And even electronic payments, like I know we do a lot of stuff with just electronically sent, but do we really know what's going on? Like if you look at it, could you honestly say, yeah, that's for that, There shouldn't be any surprises. And, and that's it in a nutshell. I just wanted to end with planning. With that said, there's a lot of, I'm doing a financial planning stuff. Next time, I am not an expert. I'm bringing an expert. I work with him very closely. If you think about getting, are you married, by the way, Chris? When you decide to get married, it's not for everyone, but when you decide to get married, it's good to see.
Speaking of somebody who just got married.
I know, right?
It was for her, that's what she meant,
Yeah.
right?
Yeah.
But I said sit down with a financial advisor, because now you're combining money. Sit down with a tax person to plan, because now, if you do your tax returns together, you want to make sure that you're not in a other tax bracket. Even if it's an extra, I don't know, 20 grand, it might throw you in a tax
So
bracket.
you don't get married then?
Huh?
If you're in a different tax bracket, you don't get married?
I am, you gotta plan for it. I know a lawyer, and he came here before. I don't think you met him, but he came here and he literally wanted a tax plan around getting married, because he wanted to make sure that their income didn't throw them off. Should we file separately? He was very concerned about that, and I completely understand, because he makes substantially more money, and I think his potential wife, it's not even engaged yet. She makes more than him, so they are going to lose out a lot. That little 20% flow through that Trump is giving all small entrepreneur businesses, he's not going to be entitled to that. So they're not getting anything. So he's like, then what's the point? You know what I mean? Like it's, I don't know. He's just at that mindset, because it really people will be paying a lot in taxes, and there were no kids and no property, so. It's just going to suck all around. So he needs to do not only tax planning, financial planning, and stuff like that. And this gentleman who is coming next week, I do a lot of, we do have mutual clients where we sit down together and work out a best case scenario for our clients in terms of, protection for health, life insurance. Yes, our job gives us life insurance, but when we have long-term sickness and the hospital said, hey, that's all we could do, we can't keep you here, whatever. What do you do? Like, our insurance cut you off because you thought you had, but you don't. Just for something, if you can't work right now and you are, like, I don't know, you just cut your finger or something, or you use a hand. We can still do what we have to do, but it's going to take us a while, because then there's therapy. Where is the money going to come from it? It's just stuff like that, and I don't think we get unemployment, so it just sucks. So it's stuff like that he protects us from. And then it's buckets, your personal budget. He does your business budget as well, and then he would do the other bucket, will make sure you're covered in case something happens to you. Then he will make sure that, looking at lifetime or term or whatever fits for you. And then we go into the stock market, because there's people who are investing outside in the stocks and they're not covered. Their assets aren't covered. So I think sometimes it's backwards, but again, if it's a little bit of money, who cares? But why would you have thousands of dollars out there in the market and you don't even have any coverage whatsoever in case something happens,
Right, because then if something does happen, anything you've gained in the stock market's wiped out. But if you balance it out, then you
And you know
have,
that
you
stuff
have at
goes
least,
up and down.
at least you still, right, at least you still have something if you balance some of it out.
Yeah.
Maybe not all of it.
It's-
You don't
it's
have to
all
have
being
the
the-
insurances, but
I believe in being diverse because let's look at it. A 401k is garbage. You know, we plan to be in a higher tax bracket when we retire. I know I plan to be. So by the time that 401k money comes out, I'll be paying. You know what I mean? You'll be paying a lot of money on taxes. Yes, it's saving you now, but when you defer those stuff and you defer it till retirement, it's not like our grandparents where, you know, everything was modest. They had money, but the tax rates didn't vary. But who knows? You know, I mean, so you gotta keep stuff diverse. Having a 401k is good, but also having stuff in the stocks, having, you know, long term, short term, whatever the case is. You know, I don't already know.
so he's our guy next month.
He's a guy. I'm even thinking of doing a whole. We was thinking of doing, because he has an MBA degree. I have an MBA degree. He's a lawyer as well, and he has his other letters for his financial stuff. And we were thinking of doing a consulting company where because we do give away free advice for, you know, consulting. A lot of consultants for businesses. A lot of the big fours, they go get their MBA degrees. And since we both have them, we give advice based on experience and what we've seen. Why not have a consulting company and they get the whole shebang? So we were thinking of doing something like that.
Yeah, I mean, I'm really surprised. Doesn't make sense that more financial planners have not become CPAs or say accountants. You know what I mean? Obviously, they're for two different things.
Yeah.
However, they need each
We
other.
overlap a lot, you know?
And I have not been able to find a CPA that also is a CFP, right? As a financial planner, to be able to help me with in any small business, because you need both.
Mm-hmm.
You need to understand what your tax
But
responsibility is.
This is why, like for instance, this is when you have certain clients of a different caliber. I've had a client tell me, I'm doing a tax planning for him. I'm asking these questions, right, about retirement. He's like, you know, let me get you on the phone with my financial advisor. And I was like, yes. That's how it's done. These two people have to talk, and we sign stuff that we're going to share information. And he's like, talk to each other, leave me out. And they love that, you know what I mean? Because I have an understanding of what to look out for, enough to know, okay, I need to get my friend on the phone. But sometimes, you know what I mean, you might be paying me for the tax planning, and I'm using his information. I'm calling him on the phone, and he's not getting paid for it. And he's fine with that. You know, because it's like we're servicing the client. Now, if it gets to a certain extent, I will recommend, I make recommendations in terms of strategies to get implemented to save on taxes. That's basically what the tax plan is. And retirement is one of those things. And I know what to tell you what's good, but what he does is he implements them. And he would definitely review what I did and say, hey, you know what, Jessie, I think this might be better if you do that. Let's call the client and see what they think. And that's what we do. So I think it's hard to get the two, but they should be talking to each other. And one, if I don't have my certification to be an advisor, I shouldn't be pretending like I know, even if I have an idea. That's the next thing. And vice versa, like he does that too.
And that's on the worker classification stuff too. I work with a lot of accountants, like you said, who have given the tax advice that then the client hears as legal advice because it sounds like, oh, it's going to save me money, and so they don't even consult the lawyer, and then all that money they save gets wiped out when they get penalized by the state. so it's
right.
So I understand the collaboration, and I think that's I mean. This is my testimony for Jessie. That was one of the big selling points, is that you talk planning, because almost every accountant I've worked with in the 15 years I've been in business has only wanted to do the tax return for a ridiculous fee, and they're MIA after that.
Right. But you see, now that I just finished one yesterday. I have one I have to do between today and tomorrow, and maybe 3 more coming. And it's separate from the tax return. But again, if I'm going to do your tax planning, I'm probably going to reduce that rate anyways, because for me to do tax planning, your book's got to be up to key. And chances are you might ask me to do that too. So I'm getting all these bundles. By the time I send you a bill for the actual tax return, it's probably going to be cheaper than what's out there, because we did all the grunt work already. I pretty much just put in all the information into my software, and all I need to do now when tax time comes is probably just review or get your updated stuff. And I'm not sitting, as a new client, I'm not sitting there, okay, date of birth, okay, this. Everything's already in this. I already did most of the work. It's kind of unfair to charge you what that rate is when I already did most of the work already in the tax plan. And that's it. It's just really to eliminate surprises. What a lot of people think are this tax plan is giving you your estimated payments for the rest of the year. Tax plan is more proactive, and it happens before you file taxes, and it's planning now for later. But now that we have these tax laws, we could implement things now. For instance, the main thing I'm talking about, if you have a LLC, and it might be better to change an S corp, because if you just look at the income that you brought in, and let's just say you did really good. I'm sure your expenses are a little bit low. Your overhead is probably not that high. Let's just say you made 200 grand, and your expenses is just not even like half of that. It's way less. You're going to be paying self-employment tax on all of that crap. If you're, I don't know what you're in corporate, but if you're a sole proprietorship LLC, you're subject to self-employment and all of that. And a lot of people forget about that. Whereas if you go in an S corp or even a C corp, now that the rates are lower, when you keep that money in there, it stays in there. You don't have to pay anything on it until you physically take it out. And if you want to pay yourself a measly 20 grand, because some people, they want to pay themselves 20 grand a year because they probably had their savings, they want to build the business up. That 20 grand of W-2 if you do a W-20 withhold, the taxes is going to be so cheap, because now the taxes on that is much lower now. So there's a lot of strategies that LLC was a thing to do, and now it may not if you're really making a killing. But, and just extra like expenses that you can take, I won't give you away my secrets, but there's a lot of expenses that you could take that is not running through your P&L. So stuff like that I look into. And that's it.
Cool.
Yeah. If you guys want to take an extra sandwich, go ahead. You can take one for the road.
Thanks.
Thanks, Jessie. So.